Okay, in this video, what I'd like to do is introduce a new indicator called the price action indicator, and that is this indicator right here. Now in trading, we're going to trade the Emini here, and it's on the 1500 tick bar chart right here, and you need to know several things in order to make a successful trade. One, you have to know what the momentum of it is. So we have the momentum oscillator here that tells us the trade momentum, the price momentum, and the time momentum. Then you also have to know, well, what is the effort behind that momentum? And this is the effort oscillator up here that tells us the effort that's going on behind the trend momentum or the momentum. And then also here we have the short-term trend with it's an oscillator with a pullback line. And then lastly, you kind of have to know what the price action is doing. So in order to know what the price action is going to do, we have this this indicator over here, which is called the price action indicator, and it is simply the ATR. This is price rather than having it in the candlestick form. It's just on a line chart here, and then this right here is just a standard ATR indicator that comes with TradeStation. And this on this indicator down here, this is simply the ATR as well. That is, these are the same. These yellow lines are the same. This is just the ATR. I put this up here so sometimes the changes here are more minute and more difficult to discern. So I put it up here as well so you could see what is taking place. And then this price action line down here, the red one, is simply a modified version of the ATR. So we look to this indicator down here to first, and then we see what is happening in the collaboration from the momentum oscillator, the effort oscillator, and the short-term trend oscillator. When you're trading this with the ATR, you want the price movement and the ATR movement to be in the same direction. Now there's several factors to this oscillator. Let me expand it here and explain it a bit. Let's go back to yesterday's. Okay, so again, this is a price up here. This line here is the process trading VWAP. So why is the ATR significant, and how does it help in our trading? Well, there's four situations that can occur with the VWAP and price movement. The first one, the ATR and price can be going up at the same time, as you see it here, and you see the price action line going up as well. Well, when the ATR range, that's the average true range, when the range is expanding, that can only happen by more buying, moving prices higher and driving the prices up at the top of the range, so you have a greater range. And here we see the range getting greater as price moves up. And I simply call that convergent buying, although it probably isn't a very accurate term because there's not true convergence there. But that's simply a nomenclature so we can relate to what we're trying to explain. And so then the next situation is you can have the ATR going down and price going up. And in this case, then, the range is constricting and price is rising. Now, this is only going to occur by less buying, driving down the top of the range for a lesser range. So you can have a lesser range even though price is going higher. The range itself is starting to constrict. So again, for the sake of nomenclature, I just call that divergent buying. Then you can have what I call convergent selling. And if you look right here, that is when the ATR is going down and price is going down as well. Now this is going to only happen when there's less selling driving up the bottom of the range for price, making a lesser range. And then the last and fourth condition is when the ATR is moving up, but price is moving down. And that's going to occur when the selling at the lower prices are driving down the bottom of the range for a greater range. In other words, the range is moving up while price is moving down. Now, the thing to keep in mind is that the range only occurs by the action of the buyers and sellers moving price in a particular direction. So the effect is immediate, and that's when we look to the price action indicator down here. So let me explain a little bit about some of the other occurrences of interpreting the price action, and it's just a modified ATR. Well, we know the yellow line is the ATR line itself. Now, what we would look for in trading is for the price action line, the ATR line, and the price line, like all to be going in the same direction at the same time, like in this point right here. And we're going to relate this back to the other indicators, the momentum indicators and everything in a minute. But right now I'm just explaining some of the aspects of the price action indicator. Now there's two occurrences within the price action indicator that you'll notice right away. When the price action line gets up to the ATR line or exceeds it, that is the time we would be looking to the other indicators in price as well to see if a change in direction is going to happen. So right here, we're seeing that it's reached that line, and here we have that change in direction right here. Now, that may look like a small change in direction, but if we take it from right here, the high of that is 66, and the low of that is 61.75. So you have a 4 1/4 points just in that little movement right there that you were anticipating by catching it, and you could trade it, of course, when they all move down at the same time. That is the real effect of the price action indicator, is to get you into the trade earlier, but in conjunction with the other indicators. The next thing that you'll notice on the price action line is these little spikes throughout here. And then it does have a bottom boundary to it. That's this magenta line. And these spikes are just the reverse of what we just described. When we just described that the price action line goes up to the ATR line, and we want to be looking at in those occurrences for a possible change to the downside. These occurrences indicate a possible change to the upside. So we can see that occurring right here, and we see that occurring right here, and then we can take advantage of those changes. So let's collapse this screen again now and bring it up to real time here. And the thing that you have to get used to in this is reading the price action indicator in real time. In other words, the ATR is starting to come up right here. The price action line is starting to come up. the price itself is starting to go up. Then we look over here to see, well, what is the momentum? Well, the trade momentum is down, but the price momentum is now coming up from the bottom line, heading in that direction. So if we were to take a trade on this, we would be looking for confirming indicators. But now we look back over here and we see that the ATR is down. So even though we think that this price line is going to cross, it looks like it's going to cross the trade momentum and potentially go up, we could not take that trade. We couldn't take it in anticipation because the ATR itself is down, actually, and price is down as well. Then we look over to the effort behind the movement of price, and we see that there's little effort either way going on right now. Let me see if I can expand this a bit. Yeah, so we can see the effort here is very little effort to push it around. So that is not where we would want to get in. And we see how the ATR line kept us from entering that trade, as well as even if we didn't have the ATR line, we would have looked at the trend momentum was down. There wasn't much participation. What participation and effort there is to the upside, and the short-term trend right now is right at the pullback line. So it's either going to cut through there or price is going to fall back down again. And it's also at the VWAP, which is another support and resistance line. So this is a critical area that we're watching. Not that we want to jump in here, but we're watching to see what direction the market is going to go in, because the time right now is around 10 o'clock. So we watch it at the open 9:30, then we watch it 10 o'clock, 10:30, 11 o'clock, 11:30 to see what trend might be going to occur. And we can tell that by using the indicators to give us the whole story. So again, here's the thing that is difficult to get used to. You are reading this price action indicator in minute detail. We see price coming down here. Now we see the ATR coming down, the price action line going down, and we see the effort starting to be negative here. We see price at the pullback line. So if you're going to take a trade here, even though price is up a little bit, you would actually probably go to the downside here. But again, now you see that the trade momentum, that's this heavier line right here, is green, and price is above the trade momentum. So this again has conflicting information in it to tell us that the probability of this trade isn't as high as some of the other occurrences that we could get into. Okay, so that's how you read them all together. That's how this new price action indicator works in conjunction with the others. We're seeing here that it is moving up slightly. And again, I know it's like beating a dead horse, but you look at the minute details on this, because the ATR is forming bar by bar and trade by trade, and basically it has to tell us exactly what is occurring to cause price to do what it's doing. So now we see price going up, the ATR. This is something that you have to get used to as well. Sometimes the price action line and the ATR line will give different readings. So you'll have to get used to which one to give priority. The majority of the time, you're going to give priority to the price action line. But here you see the ATR going down, but the price action line going up. So, and price itself is going up. starting to cross the VWAP, which is support and resistance. So we would give the momentum here. We see the trade momentum going to the upside and starting the angle ups. So we would give our bias to an upside trade right now. So at any rate, that's how you use the price action indicator along with the trade momentum indicator, the effort, and the short-term trend oscillator. So hope that helped, and I will see you on the next